Hello everyone and welcome to Financial Intelligence. Many people are excited to receive new stimulus checks because they think that the government is doing them a favor by giving them free money. In reality, the government is taking away money from the middle class families and enriching the upper class. In this video, I'm going to argue that stimulus checks mean that the US government is implementing a regressive taxation policy. First off, let's clarify what regressive taxes are. A regressive tax is a tax applied uniformly, taking a large percentage of income from low-income earners than from high-income earners. It is in opposition to a progressive tax, which takes a larger percentage from high-income earners. My point is that stimulus checks are going to benefit the upper-class families more than they will help the middle-class families. To demonstrate my point, let's set the stage by looking at three factors in play here. Number one, the impact of stimulus checks on living costs. Number two, the impact of stimulus checks on income levels. And number three, the impact of stimulus checks on investments. Number one, the impact on living costs. Stimulus checks are going to cause inflation and drive the cost of living higher in the near future. When the government injects more money into the economy, all prices are going to inflate across the board. That is simply because more money is printed and distributed, but the level of production and available goods for purchase have not changed. We are seeing that the prices are rising slowly but surely in different areas of the economy. For example, if you look at oil prices, they have gone up by 50% in the past 6 months. Oil prices are key because they influence the cost of transportation and consequently the cost of basic goods. Another example is lumber that is tied to the price of housing. Lumber too has gone up significantly in the past 6 months. In the case of living costs, higher prices are going to negatively impact both middle class and upper class families. To illustrate my point, I have created a matrix to keep track of how each factor is going to impact middle class and upper class families. So in this case, we have a minus next to both of them. Now let's look at other factors in play. Number two, income levels. In terms of income levels, most middle class families are going to see a small increase because of the stimulus checks. However, in the long term, families earning a fixed income are not going to receive a significant increase in their pay. Of course, some middle class families own their own businesses and they can technically increase the prices of services they offer. So they're an exception in this case, but in the majority of cases, middle class families earn fixed incomes and have no control over their hourly wage rates. Now, let's look at upper class families. A good portion of upper class families own their own businesses and hence can increase their income levels by charging more when inflation causes all prices to go higher. Another segment of upper class families have high-paying corporate jobs. They might be earning fixed salaries, but a significant portion of their compensation comes from equity. In other words, they get paid in stock shares of the companies that they work for. Since stock prices are also going up, the income level of these upper class families are also going to be protected to a large extent against inflation. So going back to our matrix, we have a solid plus for the upper class and a tiny plus for the middle class in terms of their income levels. Number 3, the impact on investments. This brings us to the most important part of this discussion, which is investments. The value of most investments are also tightly correlated to the prices of commodities and services. As the inflation goes higher, the upper class families that have large amounts of investments in the form of stock portfolios or real estate properties will enjoy an increase in the value of their assets. However, lower and middle class families who do not have as much money invested in the stock market and real estate will fall behind significantly. So in this case, we will have a big plus for upper class families and a tiny plus for middle class families. In summary, the stimulus checks are going to cause increased inflation in the economy. As you can see in the matrix we analyzed, while the cost of living is going to negatively impact everyone, upper class families are somehow protected and actually stand to gain from the inflationary forces caused by stimulus checks. On the other hand, low-income families are going to see their standards of living decline over time. Therefore, despite the fact that most upper-class families are not eligible to receive stimulus checks, they stand to gain more from these checks than the middle-class families. This is why stimulus checks are actually a form of regressive tax, transferring money from the middle class to the upper class families. I hope that you liked this video. If you have any suggestions or feedback, please add them in the comment section below. And don't forget to like and subscribe and hit the notification bell so that you don't miss any of our future videos. Thank you and take care.